Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this week's topic, guys, is more of a mental topic, mental approach, okay? It's called How Things Happen Matters, but it shouldn't, okay? So we're gonna talk a little bit about psychology. I will go over a few charts in this. It's a very powerful lecture because we haven't talked about psychology in a while. We've been focusing a lot on the charts. We've been focusing a lot on money management, trade management, etc., and so forth. But if you can't get your head right, you're never gonna be a great trader. I mean, this business is 99% mental. A lot of people call it a mind bleep, right? It is that way, okay? So a lot of times we'll talk, for example, about odds and about expectancy and do you believe in the odds? Well, today we're gonna dig a little bit deeper into that very topic and understand why many of you, most of you out there are struggling. Some of you are failing or you're stuck on a plateau. You're a little bit up, you're a little bit down. You're kind of in that break-even plateau, that purgatory of trading, so to speak. How do you get out of that? Well, how things happen matters, but it shouldn't is a great topic for that because, for example, if you have a 50% batting average and you take 10 trades, well, it shouldn't matter if you win or lose the first 5. What if you go 0 for 5? So what? You'll win the next 5. What if you win the first 5? Well, it doesn't seem to matter, doesn't it, right? So my point simply that we're going to talk about today is how do you cope with the losing streaks, the pullbacks, because they happen, right? The law of averages, statistics, they work, okay? So reversion to the mean is a very real thing. Law of averages is a very real thing. The problem with those things is how do they mentally affect you? And for many traders, once you get a losing streak, even if it's a short losing streak, you start doing things differently. And that is costing you lots and lots of money. You either believe in the big picture, you believe your plan works, you believe your plan's right, you believe in the odds, or you don't. It's that simple, guys, okay? So you really have to understand what your odds are, what your expectancy is, and also how to overcome some of these losing streaks. Very powerful lecture today, guys, and you really need to dig deep mentally to be a great trader. Be disciplined, be consistent, and understand the market is the greatest meritocracy on the planet, and you should love that about the market, okay? So if you like this video, guys, please click the like button. We really appreciate it if you would do that. See how many likes we can get out of this bad boy. Also, if you like the channel, please subscribe to the channel, guys. It's one of the best channels out there on YouTube when it comes to accurate, honest, hardcore trading information, so we'd appreciate it if you subscribe. And don't forget to click those notifications, that little bell there, that notification button. We appreciate that too. I am Jared Wesley of Live Traders. Let's get to it. All right, guys. Today's topic is how things happen matters, but it shouldn't, right? So it's exactly what the title says there, okay? So we get into trades sometimes and they win, sometimes they lose. Well, if the odds are the odds, it shouldn't matter in what order things happen, right? So for example, if you have a 50% batting average and you're going to make a bunch of money with a 50% batting average, does it matter if you take 10 trades and the first 5 stop out? No, not really, but it does. Why does it matter? Because we're human beings, right? Our goal is to be robotic. We call it robotic indifference, right? But we're not always robotic, but we have to be good traders, okay? So again, it doesn't matter the order in which wins and losses happen as long as you know generally, hey, prior results suggest that my batting average is 50% or 40% or 60%, okay? So that's what we're gonna talk about today. It's a very, very important topic because I think what's happening to some of you is because of the way things are happening, you're letting it affect your trading, right? Meaning you're taking trades that are too aggressive, or maybe you're getting gun shy when you have a losing streak. All right, so again, I understand for newer traders this is challenging because you don't have a track record yet. I get that, okay? But at the end of the day, you have to understand the odds are the odds. Believe in the odds, okay? If you're a 300 hitter in baseball and you're a 0 for 20 slump, you're going to come out of the slump and probably be a 300 hitter after the slump. Same is true for trading. So how things happen does matter psychologically, but it shouldn't. So we're going to talk about that today. But before we talk about that, we have to do when will the insanity stop? It's crazy, guys. So talk about when will the insanity stop. Today's Well, they're not quite as egregious as we've been used to recently. Like lately, we've had some pretty unbelievable when will the insanity stop sessions. This one is not necessarily as much about the money, and it's more about the reasoning and thought process behind it, what people do, how crazy they are, how insane they really are. So again, I want to reiterate that it's not necessarily about the dollar value with this. It's far more about the mindset that people are coming. So let's take a look, okay? All right. I mean, the first line says it all. I maxed out my account on margin as well. That's never a good start to a trade, guys. Ever. Those words should never come out of your mouth. I maxed out my account on margin as well. All right. And then this guy goes on and on and on. I don't care if I lose, but I'm telling you, people who lack well-defined bleep. Remember, this is a bull market and we all die eventually. It's only money. What? Are you kidding me? Come on. Guys, this is what gamblers look like when they trade. You don't have a well-defined trading plan. You're maxing your account out on margin, which means you have no money management rules, okay? And you always say, it's only money. We all die eventually. What are you doing? You're trading like an idiot, okay? You're not a trader. You're a gambler. Just admit it. Just say, I'm a gambler. And then I'm okay with it. It's kind of like when the news is supposed to report the news, but they spin their opinion on it. Well, just tell me you're an opinion journalist and don't tell me you're stating the facts. Well, this person should just say, I'm a gambler. I'm a gambler. And I'm like, all right, cool, go gamble your money away. But don't call yourself a trader. Don't do that, okay? So, like I said, you never want to go into, I maxed out my account on margin as well. It's just a terrible approach to trading. And then when we go over to the right-hand side, you know, I guess the market makers are once again screwing the regular guys as retribution for the Robin Hood fiasco. Market is nothing more than a scam, total BS. Think about that line for a second. Think about the type of person or the thought process it takes for somebody to say the market makers are, quote, once again screwing the regular guys as retribution for the Robin Hood fiasco? You really think that that's what the market makers wake up and go, you know what? I got to get me some good old-fashioned regular guy traders today to pin to the wall. Right? I mean, that's just ridiculous. Those guys wake up and they're thinking, well, how am I going to make money today? Robin Hood fiasco. Come on. And this is the way people talk. This is the way people are. Market is a scam. Well, if it is, then why are you messing with it? Why are you dealing with the market? If the market's so terrible, it's such a scam, why are you playing it then? If you truly believe the market maker's out to get you, then this ain't your business. Move on to something else. Okay, go play checkers. All right, this is chess. Okay? It's just, it is what it is. The market makers are out for themselves. Guess who's also out for themselves? You and me and everyone else. And don't even start with me. If you had the access to information, knowledge, and technology that those people have, you would use it for your benefit also. Yes, you would. All right? You would. How many of you out there right now, again, I'm not going political, how many of you out there don't need the $1,400 coming to you from the government, but you're going to take it anyway, aren't you? Why? So the government can go more into debt? Yep, because screw them. It's for me, 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 me. Everybody's me, 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 me. That's the whole world. You're not Mother Teresa, and neither am I. Okay? So we sit here and go, oh, the market makers are screwing the regular guy. Well, you would too. If you were a market maker, if you were in the position to take advantage of someone else, you likely would. You know, don't give me your kumbaya song about how righteous you are and how much integrity you have. Okay? That's a great idea, Sean. I don't get stimulus money, so I don't know, but I think that's wonderful. Yeah, you're donating it. So anyway, let's dig in, guys. Okay? I'm just telling you that, showing you how silly people can be out there, maxing out your margin account. It's only money. Robin Hood fiasco. Market makers screwing the regular guy. Well, then, if you think it's that bad, don't play their game. Don't play the market. Find something else to do with your life. Okay? Just stop being a victim. My goodness, this world is just a bunch of victims. You live in the United States of America, for goodness sakes. Okay? Anyway, let's dig in. Do you believe? We did a lecture. I think it was November. I could be off on that. Okay? And it was, do you believe in the odds, was the name of that lecture. Do you believe in the odds? So may the odds be with you. Do you believe they are? Okay? So we can talk all we want. and sit here and say, yes, I believe 2R all or nothing works. I believe 3R all or nothing works. I believe. But as I always say, actions speak louder than words, okay? So you can talk is cheap, but what do your actions show? So we're going to do a little bit psychology. Somebody asked me about that the last couple of days. Can you talk a little bit about psychology? So let's dig in a little bit. There's only a few charts today. It's mostly text slides that, again, because it's psychology. So here's the thing, guys. Sequence matters. The fact is, how things happen matters, okay? But it really shouldn't matter. If you truly believe in the odds, and at the end of the day, you know what your general batting average is because you've been trading for a while, the order in which it happens is irrelevant to you. The money at the end of the month or the year is all that matters, okay? So the odds are the odds no matter what order things happen in. So 50% batting average with a 2.0 win-loss ratio can present itself in many, many, many ways, okay? So you win 5 in a row, then you lose 5 in a row. 50%. You're still going to make 5R. Assuming, you had a 50% batting with a 2.0 win-loss ratio, it's still 5R, right? If you lose 5 in a row, then you win 5 in a row. It's still 5R, okay? If you win 1, lose 1, win 1, lose 1, win 1, lose 1, go back and forth for 10 trades. Guess what? It's still 5R, okay? If you win 3 in a row, then you lose 3 in a row, then you win 1, then you lose 2, then you win 1. It's still 5R, okay? But how does this affect your trading is the question. Now remember, a 10 trade sample size is very, very, very small. So you really, to get an accurate representation, you need to do this over 100, 200, 500 trades, okay? But I think we all know, and it's a rhetorical question, do you sometimes get up in your head when you trade? Do you? You sometimes get up in there? Oh my gosh, it's my 7th trade in a row. I started off the month, down 6R, this and that. And then what happens? It affects your trading, okay? It affects the future trades that you haven't yet taken, okay? So sequence does matter. We can sit here and act like it doesn't matter, but it does. So what's it look like? What do losing streaks cause traders to do? Well, it causes them to question their trading plan, potentially be more aggressive, trying to get their money back, possibly be less aggressive to the point where you're gun shy. You're like, oh, I don't even want to take a trade. Nothing's working and this and that. You become overly strict with patterns sometimes, thus never taking trades, which is kind of what it says above, right? You're overly strict or you're just gun shy in general. Maybe you become too lenient with your patterns, okay? That's taking a lot of junk, okay? Maybe you raise your risk to compensate for the losses in hopes to make it back. You're like, well, gosh, I lost 10R last month. If I double my risk, I only need 5R to get it all back. Maybe you lower your risk to help calm the stress from all of the losses. And all of these things do what? They mess with the odds, right? You had a plan that was working, potentially. I don't know for everybody. You may have had a plan that wasn't working. But imagine if you were winning 3 months in a row, right? And then last month you did terribly. The logical thing to do is to do nothing. You won 3 months and lost 1 month. Well, you're up 75% of the time. That's not bad. The logical thing to do is to do nothing. But what do most traders do? They simply go, oh, I can't take it anymore. And they change something. Significantly change something most of the time. Okay? And again, if you're a new trader, that's a challenge because you don't have the statistics to know whether or not you should make that change or not, right? But if you're an experienced trader, let the odds be your guide. So the answer to this question, okay, about sequence is review all your trades, number one. That's the first thing you always do. Even when you're winning, you review all your trades. You want to know, am I trading well? Am I not trading well? So the goal after reviewing your trades simply is to see if there is something wrong. Have I been doing things differently? Is there a reason for this losing streak? Okay? Make necessary adjustments and then get back to trading consistently again. All right? And this is the area where most traders significantly struggle. They are not consistent. They do one thing this time and a different thing the next time. Okay? So you do all these things because the order in which things happen. Tell me I'm lying. You go through a big winning streak, you come off a really big month. What you doing? You're walking around with your shoulders up, your chest out, telling everybody how they should be trading. Right? You are. You're so quick to dispense advice to other people when you're on a winning streak. You're so quick to criticize other people's trades. Yeah, you shouldn't have taken that trade, dude. I knew that wasn't going to work from the start, man. And then what happens? The market gets to you too, and it humbles you, because it humbles everybody at some point in time, sometimes more than once. And now you're down and out in the dumps. Now what? Dude, you got any advice for me, man? I've been doing like 2R all or nothing. It just hasn't worked. And you're all emotional and stressed, and you're down and out. But yet when you're on your 10, 20, 30 stock win streak making tons of money, you are giving advice to people. Now you're soliciting advice from people. Man, can you help me? Well, sometimes maybe you need help. That's true. But if you're a consistent trader and you've been winning 3, 6, 9 months and you have one bad month, why are you down and out? Why don't you just believe in the odds? Because we're human beings and the market gets to us. Emotions get to us. So the question then is, what are you really doing when you're having a losing streak? Are you really objectively going through your process and figuring out what the issue is? Are you reviewing your trades? Did you find anything wrong? Are you making adjustments? Are you trading consistent? Have you changed something? Okay? So understanding what's required. We saw this slide, I don't know, a week or two ago. Respect and recognize the difficulty of the profession. Mental, psychological challenges, hours of hard work and dedication, constant adjustments to market changes, whether that means being a little more aggressive in a giving market, being a little less aggressive in a non-giving market, the stress of the financial risk, right? This is the only job that's going to cost you money if you're not focused every day. Most other jobs, you just either don't get paid or you still get paid even when you mess up, right? A data entry job, you mess up, they still send you a paycheck. So continually work to improve. Continuing education, constant review, prepare, train for the market. Don't be afraid to make changes to improve if you have an objective, empirical reason to do so. All right, I'm not going to spend as much time on this slide because we already went over this one. All right, but I took this slide out of professional trading strategies because I think it's important. Are you an average trader? You see, guys, average traders don't make money. What average traders are like is they lose a little, make a little, lose a little, make a little, break even, and they sit there and they spin their wheels. They walk and run in circles, right? I'm so close. If just, I'm so close. And that if just could be like 20 different things. If I just held my trades to target. If I just didn't take that one stock that I let go past my stop loss. If I just didn't overtrade on the bad days. If I'm so close. No, you're not. No, you're not. Right? You fix this and then something else goes wrong. All right? Average traders, the little things matter. So you don't have a trading plan or a business plan. You have no direction. Or maybe you have a plan and you don't follow the plan. So no money management rules. You sell too soon. You give back profits. You're desperate to recoup your losses. You overtrade on bad days. You don't take stops. You make excuses why you're not making money. You know, like that person earlier said, the market sucks. Market's BS. Okay? You're generally speaking emotionally undisciplined. And you're naive and somewhat unrealistic with regard to your timeline for trading success. This shit's hard. It's going to take you years to get this. If you came in, the big swing and you know what, and you thought you were going to get this in 3 months, that's a funny joke. Go try it. See how it happens. Okay? You're glued to the monitor. Maybe you watch every tick. Uncertain, lack confidence, don't listen to the advice of others. You're nervous, worried most of the time. Or sometimes the opposite's true. Maybe you're overly confident, too confident, and you risk too much too soon, and you make some bad mistakes. The average trader is a frustrated trader, right? The average trader spins their wheels, chases their tail because of one thing: consistency. They lack it. They lack consistency. All right, so you have to find a management approach, a trading approach even, not just a management approach. You have to find a time frame that speaks to you, a pattern that speaks to you, a management that speaks to you, and go out and do it. Stop changing everything all of the time, okay? You're just going to continue to spin your wheels and blame it on other things when in fact it's really you. And how does this manifest itself? It manifests itself when you're in a chat room sometimes and you see people going, yeah, I made $30,000 in February. Oh, I made $5,000 in February. I made $50,000 in February, right? And you're going, I lost money in February. What's wrong with me? So now you're thinking you're alone in this trading world, in this trading universe, when in fact, you're part of the 90 to 95% crowd. Yes, you are. So don't feel alone. The struggle is real and it's normal. I'm not saying that you're not the reason for the struggles. You very well could be the leading cause of the struggle. But that doesn't mean it can't be fixed. So don't compare yourself to others per se, because you don't know whether they got lucky, they traded poorly and got lucky. You don't know if they have way more experience than you. You don't know their situation. So try not to compare yourself to other people, because it will only make you more frustrated. Okay? Compare yourself to yourself, meaning write down a trading plan and compare yourself to how well you traded that plan. And if you didn't trade it very well, you got to ask yourself, why? What was it about that plan that was so hard for me to follow? And perhaps you need to make an adjustment that makes your plan easier to follow, even if it makes slightly less money. Okay? So here are some things to think about. You don't believe in yourself. Perhaps you have a poor self-image or a negative attitude, right? You don't think you can do it. I mean, it's hard to build confidence when you don't believe in yourself, right? And sure, I get it, the chicken and the egg, I get it. But you're going to have some form of positive attitude at some point. Whether that means going to the gym, whether that means taking a hike, whether that means seeing a therapist, whether that means having an accountability partner, something that keeps you on the straight and narrow, the belief in the bigger picture. And that's really important, the belief in the bigger picture. That you are new, that you're supposed to struggle, and struggling is normal when you're new. And even when you have experience, you're going to have some pullbacks. It's normal. Unmall back last year went 0 for 14 to start the month. It was down $14,000 to start the month. I believe it was August. He ended the month up $15,000. Now, is that a rock star month being up $15,000? No, but from where he came from, it's a pretty good comeback, isn't it? You believe in the odds, okay? So many people come into this business and they failed before they started because of poor planning, no planning. You don't treat it like a business. You don't give your business the proper tools to succeed. You lack the proper education because education's too expensive and I will pay for the course when I make money as a trader. Okay, let's just put the cart before the horse one more time because you know better. I'm going to use this crappy old set of golf clubs and I go out and beat Tiger Woods and I've never played before. And you know what? After I beat Tiger Woods, I'm going to get some golf lessons. Jared, that's the dumbest thing I've ever heard. Well, then why do you do it with trading? After I beat Mario Andretti, then, I'll learn how to drive. That's the dumbest thing I've ever heard. Oh, you know what? I'm going to operate on you before medical school. And, after I kill you, then I'll go back to medical school. That's the dumbest thing I've ever heard. But people do it every single day in trading. Guys, I'm telling you this flat. If you can't, and I'm not talking live traders. I don't really care where you get your education. That's up to you, man. Okay? That's up to you. All right? If you want the best education, you'll stay at live traders, but it's up to you. My point I'm making, there's nothing we do in this world that doesn't cost us some money to learn, whether it's being a chef, whether it's being an engineer, whether it's being a doctor, whether it's being a race car driver. You're going to have some form of training, some form of coach, some form of schooling or education, bar none. And the people that don't, extremely rare, few and far between. The exception to the rule, truly. But hey, you know better. You're about to embark on one of the most challenging things known to mankind, making money in the stock market as a day trader. Yep, it's up there in the top 3 most challenging things to do. The first one I can't say because you guys will get political on me and get pissed off at me. But that aside, it's probably up there at number 2 hardest things to do in the world. Okay? But you're going to do it without any education, without any training. Okay? Good for you. See how that works out for you. Okay? So you don't have a coach to guide you. Failure to define your short-term goals, long-term goals, intermediate-term goals. Okay? So what are you really working towards if you can't measure any of it? You don't have goals, so what are you really working towards? I just hate my boss. I want to leave the job. Oh, that's your goal. Well, how are you going to achieve it? Remember, we talk about it all the time. A lot of people have outcome goals, but they don't have process goals, okay? They don't have process goals. Do you? Oh, everybody wants a Lamborghini. How are you going to get it? Everybody wants to be, I don't know, the next Mark Zuckerberg. How are you going to do it? Everybody wants to quit their job and be a trader. How are you going to do it? The outcome goal is nice and all. Those are pipe dreams. The process goal is where the hard work starts, okay? You lack discipline, all right? You have to stay in control of your emotions, all right? A lot of you guys lack capital, which is simply an extension of poor planning. I don't have the money right now. Well, then you're not ready. If you don't have the money to open a McDonald's, does McDonald's give you a branch or a franchise? No, you don't have the money. It's like, hey, my car's broke. I don't have the money to fix it. Does the repair shop just fix your car? No, they say, well, when you get the money, come back and bring your car to us. We'll fix it for you. But in trading, no, you're like, yeah, I scrounged together like $1,200. I want to be a professional trader. I bet you do, you know? And I want to be Ayrton Senna and Michael Schumacher, but I don't want to work for it. Oh, okay. Good luck with that, Jared. Good luck with that, you guys. But hey, you can also go somewhere else where they'll take your $500 and tell you, I turned $562 into $397,000. Oh, I'm great. I didn't tell you anything about the ridiculous amounts of risk I took to do it, and you wouldn't be able to duplicate it. But that doesn't matter. Sign up for my course. That's the shit they teach you guys out there. And you believe it. You believe it. That's the worst part, okay? So, poor money management rules. You exceed your max daily loss. You can't accept the loss. I'm telling you guys, and this is one you really have to just accept deep inside. And you should actually appreciate this from the market. This is one of those negatives that's the biggest positive of your life. The market doesn't care about you, doesn't care about your family, doesn't care about the facts that, you know, you may miss Christmas this year, as it says, that you lost the money by adhering to your rules or not adhering to your rules. It doesn't care what school you went to. It doesn't care if you even went to school. It doesn't care what country you were born in, what color your skin is, whether your parents were nice to you, whether your parents beat you. It does not care. Because it doesn't even know who you are, so how could it care? And you should appreciate and love that about the market. Because guess what it does? It takes every single possible victim out of the equation. Doesn't it? Market doesn't know me. I can't play the victim card? What am I going to do with myself? But yet people still like to play the victim card in the stock market. Okay? But the market doesn't even know you exist. So how can it care about you or not care about you? The market is indifferent to you. All right? That's it. And you should love it. Think of it as the greatest opportunity that's ever come by your desk or ever come by your life. Because the only person who is in determinants of whether you're going to succeed or fail is you. That's it. No boss. No nepotism. No politician. No nothing. Just you. Just you. Okay? So, poor trade management rules. Sell too soon. Use a trade management system you can't follow. How many of you are doing that? Use a trade management system you can't follow. Or don't follow, but think you're going to follow it. Admit it. You're sitting here going, yeah, I know I'm going to do that. I didn't do it last month or the month before. You know, I look at my trades and I'm like, okay, 62% of the time I follow my plan. Well, what about the other 38%? Maybe you might want to adjust your trade management system so you can follow it 90%, because that's kind of the threshold, 90%. And then slowly work your way back up the ladder, right? We always talk about Mike Tyson's Punch Out. Dates me, I know. You don't start with Mike, you start with Glass Joe. Why? You're not ready for Mike. Well, you might not be ready for certain types of managements when you first start. So pull it back a little bit. What the beauty of that is, you're not expected to make money in your first year of trading. You're not. You're expected at best to break even. If you do make money your first year, you're ahead of the curve. So who cares if your management system isn't the world's best? Find a base point, a base level, and work up from that level. Okay? Maybe you lack objectivity. Your ego's too big. You're emotionally irrational. Maybe you ignore basic common sense. Maybe you're in denial about your shortcomings. I mean, the ego is a powerful thing, right? Maybe you can't cope with the change. Well, the truth is, if you're honest with yourself, or if you're not honest with yourself, how are you going to improve on yourself? If you're lying to yourself, it's like an alcoholic denying they're an alcoholic. Well, it's kind of hard to quit alcoholism if you don't think you're an alcoholic, isn't it? Well, if you don't think you're making egregious mistakes, it's kind of hard to fix them, isn't it? So acceptance is a big, big deal. You use that DABDA, right? Denial, acceptance. You guys know the one I'm talking about. Maybe you lack persistence. Maybe you're lazy. Maybe you just don't work hard enough. It's very possible. And you know why I say this, guys? Any Tom, Dick, and Harry can be a trader. You don't need to go to college to be a trader. You don't need some special degree or special piece of paper to be a trader, right? Okay? What does that mean? It means anybody can jump into this business that wants to. What does that mean? You're going to get a whole plethora, a whole range of diversity in this business. Some people who are extremely hardworking, some people who are extremely lazy, and everybody in between. The difference is there's no boss telling you you're lazy. It's just you, and you may not think you're being lazy. I have a friend who works 38 hours a week, and he thinks he's a really hard worker. And I said, that's not a hard worker. Yeah, dude, I work hard, man. Okay. Well, that's why you've been stuck in the same job at the same income level for 9 years now. Fact. Oh, 43 grand a year, 9 years in a row. Okay? It's a rigged game, I'm telling you. All right? So, and the last one here is expectations exceed your experience. You're greedy. Maybe you're just naive. You demand too much too soon. You're being unbelievably realistic. You know why? Because, Jared, you don't understand. I have to make this work. Why? Because I just lost my job and my pension, or not my pension, but my unemployment runs out in 6 months. I have to make this work in 6 months. Wait, let's go back to step one. Wait, the market doesn't care about you, your family, or the fact that there won't be Christmas this year. Okay, but you have to do it in 6 months. You don't have a snowball's chance in hell of doing this in 6 months. You don't. Period. I don't care what anybody tells you. But no, you know better. With no experience, you're going to come in and tell somebody with 16 years experience that you know better than them. Because it has to work for you, Jared. Come on. How many of you guys have come in and be like, no, I understand, and what you said makes sense, but I'm different. You don't have to say it, but you think it, don't you? I went to Harvard. I'm different. I graduated, summa cum laude from MIT. I'm different. I used to, I don't know, manage 57 people. I'm different. I've never failed at anything in my life. I'm different. Blah, 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 blah. I'm special. You're God's special child. You might be, but the market still doesn't care. The market still doesn't care. And you should love that. All right? So, ask yourself, I hate to use this phrase, but ask yourself, am I acting like an asshole? What that means is, am I ignoring the advice of people that have more experience and that are more successful than me? Am I lacking objectivity? Is my ego too big? Am I really working hard enough? Am I following rules? Do I even have rules? Am I being an asshole? That's really what it comes down to. Okay? Many people, well, they are, unfortunately. And you have to check yourself. The market doesn't care what your prior experience is. I spent time on Wall Street. I struggled my ass off the first year or two in trading. I came in with a big ego. Why? Because I was always taught, because this is what the street tells you, there's smart money and there's dumb money. And you know who the dumb money is? The average investor. And you know who the smart money is? Everyone on Wall Street. Well, that's just BS. There's a lot of stupid people on Wall Street. Like hundreds of very stupid people. Okay? And I don't mean stupid in terms of intelligence. They have 150 IQ. But if your ego is big enough, your IQ doesn't matter much, does it? We've seen that. Some of the most egregious failures in human history because of ego. Don't let yours ruin your trading business. And I've seen some, quote, average traders, the dumb money, be unbelievably successful. So where do you fall into that? You gotta have to ask yourself that, okay? So now, let's take a look. Sequence matters. How things happen matters. Do you guys remember this? I think it was yesterday. Maybe it was 2 days ago. I don't remember. So PayPal, 1 minute, 3-bar play, right off the open. Was this aggressive because it was off the open? Yeah, it was. Is it still a 3-bar play? Yes, it is. Right? Wide bar, narrow bar, triggers me in at 269. I say me and some of you as well. I had my stop loss at 267.50. Guess where that bar went to? It went to 267.49. True story. Go take a look at it. 267.49 or 267.50 on the penny, I believe. Okay? What happens? Came right back up. So what did I do? I 84%ed it. I 84%ed it, just like Lyft today where we made money. Okay? What happened? Massive red bar comes in, chops around, goes higher for the rest of the day. So I sit there twiddling my thumbs, all pissed off at the world. Because I was right about PayPal, but I was wrong with my timing. But it still went $5 past our entry, which would have been about 3R. So 2 full stops, then it rips. So what's the lesson? Well, there's a lot of lessons here. Maybe give it a couple more pennies below, under here, and I didn't. Maybe give it a few pennies below. But that doesn't preclude you from still stopping out. You could give it a couple pennies below, or you give it a nickel, you give it 50 cents below this, and it still might stop out. Then you say, okay, well, what's the second lesson? Well, 84% it, right? These are all the traditional things I've taught you guys. Give the stop loss more room. Check. Oh, still got stopped out. Get back in it if they stop you out. Okay, I did. Oh, still stopped out. And then it goes $5 higher. What's the answer here? The answer here is sometimes, and hopefully infrequently, you're going to take it on the chin. Now, you may get back in this. That's a possibility for a third trade. That's fine. But what if you don't, and you come back an hour later, 2 hours later, and you're like, my goodness gracious. I took this thing twice. It took me from minus 2R, and now it's up 3R. Sometimes you're going to take it on the chin. Sometimes you're going to take it on the chin. And remember, the order in which things happen matters, but it shouldn't, which means don't let it bother you. If you go 0 for 5 and you bat 50%, know that you're probably due for a winning streak. But you might go 0 for 7 or 0 for 8. It's possible. Right? Flip a coin. How many times could you get 7 tails in a row, 8 heads in a row? It's not 0%, is it? It's a higher percent than you think. So it's possible. So there it goes back to, do you believe in your plan? Do you believe in your trading? Do you believe the odds work? And for many of you, the reason the odds don't work for many of you is because you're too inconsistent. You take varying patterns that aren't really patterns. You manage one trade different than another trade. And most of the people doing that chase their tail. There's probably a few people that make it work for themselves. But most of the time you don't. Be consistent with your approach, whatever that approach is. So this is one where you sit there and go, okay, well, if I had given it more room, then I still would have got stopped out, right? I would have not stopped out on the first trade because you gave it more room. But the second trade would have stopped out, and maybe the 84% would have worked. So maybe giving it more room in this case helps. But there are times, plenty of times, where it doesn't help. Okay? Let's take a look at another one. How about this from Walmart the other day? I look back at this and I go, wow, this was a really good trade, right? Wide range green bar took out pretty much everything. Took out 2 red bars and almost broke the high of the day right there. And then what do you get before the entry? A little shakeout. So I'm salivating because not only do we have a 4-bar play, we have a little shakeout before it triggers. I'm going to repeat this because you need to hear it. Wide range bar takes out these 2 red bars and this topping tail. Consolidates for 2 bars. You now have a 4-bar play forming. And then the shake comes. Comes all the way back up. You look at the daily, it's gapping over a 15-minute pivot. It's got room back up to 134. You go, okay, I did my job. Get in at 130, 180, which I did, with a stop loss at 130, 130. Give it the room. Don't give it right there. Give it the room. Because that's what happened the first time. Not the first time, but on the last trade, PayPal. We didn't give it enough room. It tagged us. Okay? Now what? You give it more room. It goes up 1.5 R, 1.5 to 1. So this was a 50-cent stop loss. This one, I think 77 cents, I think is what it was. Guess what? The target's 2 to 1. The target's $1. I need 132.80. It goes to 132.57. What's the lesson? Nothing you could do about it. You did everything right here. What happens? Get back in on an 84% rule play right there. See it? Pops up, pulls back. All right. Sorry, my bad. Not an 84% rule. My bad. My apologies. Chops up, pulls around, chops around, chops around, chops around, chops around, chops around. What happens right at the end of the day? Right at the end of the day, what happens? Tanks. Gives you a full stop out. So you're up $1,600. The stock's chopping around in a very, very bullish manner from 132 to 132.50 for almost the entire day. And then what happens? It tanks. Right at the end of the day. And it gives you a full stop out. Oh well, there's no chance to re-enter here because it didn't stop you out to the last 5-10 minutes of the day. And then you go back and you review this trade and you go, you know what? I would take that trade again every day of the week and twice on Sunday. So what can you do about it? The answer is nothing. The answer is when you see this trade again, you take it again. If I see this trade tomorrow, I take it again. That's it. There's nothing you can do about it. The odds are in your favor over the course of 100 or 200 of these if you take them. If you take 1, 2, 5, 10, shoot, they could all stop out. I don't know. Right? They could all stop out. Let's take a look at one more. What about this on AMKR? Okay, so what do we have? A stock that gives you a pretty nice buy setup. But if you take a look deep inside, we talked about this one last week. It triggers and stops you out. Look at it. It triggers and stops you out. 2110, 2080, boom, triggers you in. What if you gave it some room? Well, it took that too, didn't it? What if you gave it an extra 5 or 10 cents? It took that too, didn't it? So 2 buy setup stop outs, then it rips. Or 2-minute buy setup stop out, then it rips. So again, what's the lesson? Well, if you have an 84% play rule in your plan, then use the 84%. But what if you don't have it in your plan? Then what? You take it on the chin and you go, you know, I took a pretty good setup here. This is not the world's worst trade. This is a pretty good trade. And the market got you. So do you believe in the odds? Do you believe that the trades you're taking really work? Do you believe that this is a good pattern, that if you took it 100 times, it would work at least 50? If you believe it, then the next time you see it, you will take it. If you don't believe it, maybe you should change your trading plan, or maybe you shouldn't be a trader. You have to ultimately take a step back, review the trade and go, did I do anything wrong? And if the answer is no, walk away feeling okay. You don't have to feel good because you lost money, but say to yourself, I did what I was supposed to do. All right? Sometimes I don't know, professional golfers, maybe they shoot 65. Somebody shoots 63. Oh, well. You did your job. You played great. Somebody just played a little better. What's the point? What's the purpose? What's the lesson? Don't get up in your head. Trading is a mind F, right? It is. It's a mind fugazi is what trading is. The market knows everything. Change your trading plan, market will test you. I just went to 2 RL or nothing. I was thinking about doing 1.5 RL or nothing. 4 of the first 6 trades went 1.5 and then didn't go 2. Market's testing you. How long can you stay consistent? Are you going to give up on me after 3 days? Are you going to give up on me after a week? Right? 1 second. All right. Looks like we're fine there, Larry. Are you going to give up on it after a day or a week? If you do, you don't believe. Right? If you give up on it, you don't really believe in it. So if you don't really believe in it, Why did you spend all that time building a trading plan that you don't believe in? Because the market messed with you for a couple days or a week? Really? That's it? Don't do that. Don't be like that. If you believe it, you'll give it a chance to work. If you don't, then you won't. And guess what? You will always be chasing your tail. Always. Okay? This business is extremely mental. I showed you guys this back in November when it happened. If you guys recall, I showed you guys this back in November when it happened. This is mean reversion, is what I call it. Average month, 15 up, 5 down. After 10 consecutive up days, the past 6 days have been 3 up and 3 down. Started November up 11 in 6 days, about 12R. Since then, this is up till the 17th, obviously. Boom, minus 4.4. But then you look at it and go, well, over a 2-week period, that's probably where I'm going to be. 15R a month, somewhere around 10 to 20. So you got to ask yourself, did you do anything wrong here on those bad down days? Or did you trade well and things just didn't work? I may have done some bad things here. I don't have to go back and look, right? I may have. But that's the whole point. Objectively go back and find out, did you trade well, or do you need to make a small adjustment? Don't take certain type of a trade, or maybe I was too aggressive, trading too early, or I took a stock that maybe had the bottoming tail rule, or maybe it was an inside day, or I went against the market. All those things. Or maybe you did nothing. Maybe you did nothing. Just, do you believe the odds? That's it. Do you believe the odds? And many people say they do, but their actions suggest otherwise. Okay, so what's the overall lesson here? Good trades fail and bad trades work. We know this. Some markets aren't conducive to your management approach. This is the hardest one for people to swallow. Guys, you don't question the market, do you, when you're winning? Right? Let's say you're coming off January and you are crushing it. I made 37R in January. I'm up a ton. Do you ever think that maybe the market was in a really giving mood for your specific management approach or your specific style of trading? No, you just think you're that good. You do. Admit it. Most of you just think, yeah, I was pretty good this month. I had a good month. I was good. But what happens in the next month when that 37R becomes break even or minus 5R? Now what are you doing? You're questioning everything. Things that you didn't even consider in January. You're doing the same thing. Nothing's changed. But perhaps, and this is where the review comes in, perhaps the market just wasn't that conducive to your particular style. What comes to mind? December comes to mind. Guys, traditionally, as a generality for my trading, traditionally, 2R beats 1R by a significant amount, somewhere around 40%, okay? So that basically means for every 10R that 2R all or nothing makes, 1R makes about 6R. That's a pretty big difference. So if you make 20R, 1R probably made 12R. Guess what in December? 1R all or nothing made 17R. 2R all or nothing made somewhere around 8R, 8 or 9R. That's what I mean by the market was not conducive to your management approach. Does that make sense? So in December, 1R was better than 2R. But man, 10 months out of 12, 2R is better than 1R. But during that 1 month, 1R was better. So what? Oh well, take it on the chin. The market wasn't in as giving mood or a follow-through mood as it was maybe the previous month. So 2R didn't do as well, but 1R really did. So don't do what? Don't go and change everything because of a bad month or two. How do we tell the difference between a conducive market and a non-conducive? You can't. In the big picture, you can't. Now, when you wake up, you can certainly look at the gap list and look at the gap in the market and go, ooh, man, there's really nothing great today. That's different. But over the course of an entire month, You can't tell at the beginning of the month that this is going to be a really good month or a really bad month. Nobody knows that. And anybody who does is lying to you. You can't say, oh, you know what? I know that April is going to be an awesome month. The best of the year. How do you know that? You don't. But day to day, you could say, you know, today's gap list isn't very good. There's no level 1 or level 2 gaps. The market's on an inside narrow range day, blah, 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 blah. So you can mitigate by being careful with the gaps you choose as well as the number of trades that you take. But you still don't know if it's going to be a great month or not for your management approach. Okay? So what can we do about any of this? Simple. Keep it simple. Would I take that trade again? It's the number one question you need to ask yourself. Would I take that trade again? And if you're a bit emotional because you had a really bad day, go take a walk. Then come back and ask, would I take that trade again? Ask other people, would they take that trade? And this is where, for example, Cliff's coaching, where you guys go and have to justify the trades you took, is so invaluable. The guy's really great. He's an unbelievably good trader. And you sit there and go, okay, I took this trade. And now you have to justify it in front of 100 people. Now that's being objective. Because now you're taking other people's opinions and that's forcing you to think through the trade again. And then the question is, if yes, then carry on what you've been doing. The odds are the odds. If the answer is no, then figure out where you messed up and how frequently you mess up. But you have to approach every day with consistency. Every single day. If you ever look at high-performing individuals, especially athletes, what do? They have a very consistent routine. They wake up, eat breakfast at a certain time, stretch at a certain time, go for their jog at a certain time, practice at a certain time. They're very regimented. A lot of you guys aren't. You're just hoping to make money in trading, but you're not expecting to make money. And there is a difference, trust me. You're coming in hoping that this is going to work for you. Okay? The discipline does equal freedom. Okay? The discipline does equal freedom. But most people don't have the discipline. And here's the rub, and I made this comment earlier. There's no coach, right? There's no coach to say you did that wrong. There's no teacher to say you did that wrong. There's no boss to tell you did that wrong. That's where the objectivity is so challenging. Be honest with yourself for a second, guys. When somebody at your office gets a raise or a bonus or a promotion, especially promotions, what's the first thing you think? I should have got that promotion. Why did he get it? Or why did she get it? Why did they get it? Because you have a very high opinion of yourself. Well, in trading, that opinion of yourself hasn't gone anywhere. It's still you. You still have a high opinion of yourself. Okay? So this is where, again, having an accountability partner, having a trading buddy, okay, having a consequence system is very powerful. Whether it's a chat room, whether it's a coaching group, whether it's a trading buddy. You need somebody to keep you in check. That's a fact. Why does society have rules? Well, we don't anymore, but we used to have rules in society. Okay? Why? Because human beings need boundaries. Seriously, we need boundaries. Well, in trading, there really are no boundaries when nobody's looking over your shoulder. You need them. They're important. Okay? And no matter what, whether you have boundaries, whether you approach every day with consistency, whether you are the most objective person in the world, shit still happens. Get yourself a Forrest Gump shirt. Okay? Acceptance. Accept that some days you are the pigeon, and some days you are the statue. No matter how good you are, this happens to everybody. Okay? No matter how good you are, I don't care if you are the greatest in the world, you will have bad days. You will be unlucky sometimes. But guess what? That is not the majority of the time. That's the minority of the time. Sure, 10% of the time, you're going to be a rock star. 10% of the time, you're going to be so bad you don't know what to do with yourself. But that other 70, 80% of the time, you should be kind of right in the middle there. And that should be good enough to make money in trading. Now, not in your first year or two, but after that it should be. Okay? So I want you to think about that. Some days, no matter what you do, how right you are, you'll still be wrong. Even if you were actually right. The market just says, no, it's not your day today. And sometimes you'll do some poor things and get away with it. It evens itself out. Okay? It evens itself out. So, in summary, I guess words of encouragement in summary, all right? You don't have to be perfect to make money in trading. So people are like, oh my gosh, that was so negative, Jared. You're telling me I'm going to take a year or 2 or 3 to make money. Yep, I did. But words of encouragement. You don't need to be perfect. Heck, you don't even need to be close to perfect. Hell, in baseball, you can make tens of millions of dollars by hitting 3 out of 10 balls. That's it. Get a hit 3 out of 10 times you're at the plate. Less than that, really. A quarter of the time, if you hit enough home runs and walk enough. Well, in trading, possibly that's true for you too. 2R all or nothing, 33% batting average breaks even. 3R all or nothing, 25% batting average breaks even. What does that mean to you? It means even 1% above those numbers, you are making money. If you bat 34%, you're making money. If you bat 26% in trading with 3R, you're making money. Now, are you making much money? No. But this should be very encouraging you. How often do you actually have to be right? Not that often. But you got to be consistent. Most traders, when they follow a plan, will achieve at least a 35 to 40% batting average. It's from my experience teaching people for years, trading myself for years. Most people will hold 35, 50%. But no matter what, if you're doing 2R or nothing, 3R or, and remember, there's tons of management styles, guys. This isn't about trade management per se. But remember, no matter this or that, you will see some drawdowns. You don't think anything of it when you have a 7-trade winning streak. But when you have a 7-trade losing streak, you're ready to walk off a bridge. Why? Why do you think it's skill when you have a 7-trade winning streak, but you think it's bad luck when you have a 7-trade losing streak? It's just part of the odds. It's all one and the same. But if you won 7 and lost 7, you still made a lot of money, didn't you? That's all that matters. If you won 7 and lost 7, you still made a lot of money. As long as you're consistent, getting your 2-to-1 profits, 3-to-1 profits. Okay? Why is it important? Because the biggest reason people get frustrated, guys, which leads to mistakes, is not fully understanding their plan and how it could potentially play itself out. How could your plan manifest itself? See, I think a lot of people don't understand that it's really actually not that hard to lose 10 trades in a row. It's really not that hard. It's pretty easy, actually, to lose 10 trades in a row. And it will happen to you. Right? It will. So, for example, you must know and understand that aiming for 3R targets means that there's a 100% chance you will have a 10-trade losing streak at some point. It's not 99.9. It's 100%. It's just a matter of time. Whether it's your first 10 trades, maybe you're on trade 1,027 and it happens. Maybe you're on trade 10,027. It's a 100% chance it will happen if you take enough trades. So when that happens, does that mean all of a sudden, magically, you're just a terrible trader because you lost 10 in a row? No, it was going to happen anyway. It just happened to you earlier than you expected, or later than you expected, or maybe exactly how you expected. But the problem is most people don't expect it. How could you not? It's just part of the odds. It's part of the odds. But how it presents itself, how it manifests, nobody knows when it's going to happen. Nobody knows that. So this is why we say, never get 2 up when you're winning. Never get 2 down when you're losing. The odds will even out, assuming you are consistent with your approach. Mean reversion. But the problem is, most of you are not consistent with your approach. Plain and simple. You're just not consistent with your approach. If you don't get that figured out, get that sorted out, you'll just be one of those traders that's up a little, down a little, up a little. 1 month you kill it, 1 month you get crushed, and you're all over the map. And you end the year up a little, and you're down a little, so what? Because you're not consistent. All right? So, I hope that you guys learned a bit about not only mean reversion, but how things, the order in which things matter, shouldn't matter. It does, because we're human, but it shouldn't. So what's the goal here? Try to be robotically indifferent. We call it robotic indifference. The computer knows that the odds are the odds. I don't care in which order the odds happen because it's just a computer. But as a human, we care about the order in which things happen, but we shouldn't. So next time you're on a losing streak, realize I will come out of this losing streak. I have in the past, and I will again in the future, and I will have another winning streak, and I will have another losing streak, and I will have another winning streak, and I will have... Nope, it's not on replay. I'm saying it twice. Because that's how it happens. Okay? Unwald talked about it yesterday. February good, January awesome. February's a little choppier. February's more normal. January was awesome. It happens. It's normal. Okay? And when it comes to trades, if you go back and look, did you take a great trade? If you did, forget about it. Just take it again when you see it. If you didn't, find out where you messed up. All right? So I hope that you guys learned a little bit about statistics, about odds, about emotions, about being objective, about being consistent, and about not being a victim in today's lecture. All right? I'm Jared Wesley of Live Traders. We'll get back at it again next week.